So, what do a homeowner, a small bakery, and a giant corporation all have in common? Well, they all rely on a financial safety net to get through the unexpected. Today, we're going to pull back the curtain on that safety net. It's called property and casualty insurance, or P&C for short. And you're going to see it's way simpler than you might think.
The answer? A financial shield, because let's be real, life is completely unpredictable. I mean, from a simple fender bender to a major natural disaster, financial shocks can pop up out of absolutely nowhere. PNC insurance is designed to be that buffer, to absorb the impact so that you don't have to.
All right, let's break this down. We're going to start with the P in PNC. It stands for property, and honestly, it's pretty much exactly what it sounds like. It's all about protecting the physical things you've worked so hard to get. Think of this as your shield for your stuff. Just imagine for a second, a fire damages your house or your work laptop gets stolen. Without insurance, you'd be stuck paying to fix or replace everything out of your own pocket. Property coverage is that financial backstop that keeps that nightmare scenario from happening.
And when we say property, we mean a lot more than you might think. It's not just your house or your car. For a business, it's the building, the heavy machinery, all the inventory sitting on the shelves, and every single computer on every desk. Basically, if it's a physical thing you own, it can probably be protected.
So, what are we actually protecting against here? Well, think about all the big what-ifs. What if there's a fire, a flood, a break-in, or a massive storm? Property insurance is built to handle the financial fallout from exactly these kinds of events, or perils, as the industry calls them.
Okay, so that's one half of the equation, protecting your stuff. But what happens when you're the one who caused the problem? That brings us to the C in P&C, casualty. And this part isn't about what you own, it's all about what you do.
Casualty insurance is all about your legal responsibility, or your liability. So if you accidentally hurt someone or damage something that belongs to them, this is what pays for it. To put it simply, it's what shields your finances from potentially massive legal claims and lawsuits.
Let's make this super real. Say you cause a car crash. Your casualty coverage pays to fix the other person's car. Or a customer slips in your store. It helps cover their medical bills. It answers that one critical question. When you are legally on the hook, who's going to pay the bill?
So we have these two really different kinds of protection. One for your stuff and one for your actions. So why on earth are they almost always sold together in one package? It might seem a little weird at first, but there's a very, very practical reason for it.
Let's just quickly recap the two sides to make it crystal clear. Property insurance is for your assets, like your car getting damaged. Casualty insurance is for your liability, like you causing damage to someone else's car. On the surface, they really do seem like two totally separate kinds of risk, right?
But here's the thing. In the real world, these risks are often tied to the very same object. Just think about your car again. The car itself, that's your property. But the second you turn the key and start driving it, you instantly create a casualty risk, the chance you could get into an accident. Since one asset creates both types of risk, bundling the coverage into one policy just makes perfect sense.
Okay, so we've got the what and the why. Now let's dig into the how. We're going to walk through the entire journey of an insurance policy, from the very first step to the very last.
It really boils down to 5 main steps. It all starts with a quote. That's when an insurer looks at your risk and tells you the price, which is called your premium. If you like the price, you bind the policy, which is really just a fancy industry word for giving them the final yes, which makes your coverage active. Then the company issues you all the official documents. Now, if something bad happens, you file a claim. And finally, the insurer investigates and gives you a settlement, which is the money to cover your loss. See? Not so complicated.
Theory is great and all, but let's put this all together. Let's look at a real-world example to see how P&C insurance actually works when things go wrong. I want you to picture a small, local bakery. You know, the smell of fresh bread, amazing pastries.
It's a perfect little business, and it's also a perfect example for us, because a place like this faces both types of risk every single day.
Okay, so on the property side, that big, expensive oven could catch on fire, destroying equipment, or a pipe could burst and ruin thousands of dollars of flour and sugar. At the very same time, you've got casualty risks. A customer could slip on a wet floor, or your delivery van could get into an accident. Both risks are there, all the time.
And this is exactly why a single, comprehensive P&C policy is so crucial. It's designed to cover all of these potential disasters. For our little bakery, that policy isn't just another bill to pay. It's the safety net that makes sure one really bad day doesn't become their last day in business.
Now, at this point, you might be thinking, okay, that's great for business owners, but what about me? Well, the truth is, P&C insurance is a fundamental piece of financial life for pretty much everyone.
Just think about it. If you own a home, that's a huge property risk. If you drive a car, boom, you've got both a property risk and a casualty risk right there. Run a business, even as a freelancer, you've got both. P&C insurance isn't some niche product. It's a core tool for staying financially stable in the modern world.
And really, that's what this all comes down to. You can't predict when an accident's going to happen. No one can. But what you can do is protect yourself from the devastating financial fallout when it does. And that is the whole point of property and casualty insurance.
So P&C insurance is this incredible financial shield for both your things and your actions. But that raises a really big question, doesn't it? When millions of people are filing claims for fires, floods, and accidents, where does all that money actually come from? Well, that's a story for our next explainer.